Hopefully that's not a lot better. Okay, hopefully that's better now. All right. Very good. Let's get started. Good morning, good evening, good afternoon, wherever you are. We have people joining from different parts of the country, different parts of the world, actually. Israel and different parts of the U.S. This is an open session to the investors, to the public. That's why we're holding it in English. I see a lot of Hebrew names, Hebrew speakers. So the reason we do it in English is because it's an open session for investors about real estate investing. I'm just starting another recording device here. Okay. This session, the purpose of this session is to interact, to engage, to get an opportunity to discuss with other investors, to share information, share experience. So you are most welcome to put your questions as I speak or on the recording regarding real estate investing. Hopefully I'll be able to answer them. I'm not an expert in every aspect of real estate investing, but I've been investing for many years on a large scale, and we'll try to help you answer your questions. So by all means, you can talk. The purpose of this session is for you to ask questions about investing. Hopefully I'll be able to address them, answer them. Can't promise that I will, but we'll try. It doesn't have to be related to today's topic only. Today's topic is your fears about investing. And I want to start with sharing a bit of a recent story or recent conversation I had with two new investors. So this couple who are living in the Bay Area, moved to the Bay Area about 2 years ago, maybe even less than that, sold the property in another country. They're sitting on a large amount of cash. They know they want to invest, but they have a lot of fears and a lot of concerns. And the fears and the concerns are coming from naturally being, afraid about investing, but also they've been hearing stories. People tell them different stories. So you have a couple, that want to invest. They know that's the route they want to take to invest their funds. They have very clear goals financially, on one hand. On the other hand, they're scattered all over the place. Will it rent? How much time will it take for us to deal with it? What happens if there's repairs? What can I trust the property manager? Should I, I'm so busy, I don't want to deal with it, so maybe I should go with a passive type of a route, investing in a passive avenue than a more of a active avenue. But if I invest in a passive avenue, then I have less control. A passive being me investing with someone else who's putting, let's say, a small group or a syndication or something like that, and I'm investing like I'm investing in a stock, and then someone else manages my portfolio, my investment. Should I go in a passive direction? Oh, but I lose control, so I should go in an active direction. And I can control, but it means more than I need to do. And the conversation went on and on in circles. Where should you do when you can tell there's a lot of fear, a lot of concerns, and they're all over the place, scattered all over the place. Now, I've been, talking to investors many times before, and this is nothing new, right? Investors, especially when they get started, obviously nervous. They don't know, they don't even always know what questions to ask. But the important thing is, I think for investors, especially beginners, is to sit down for a few minutes and try to decide, if you cannot decide on your strategy, try to decide what you want to accomplish first financially, and maybe follow from that. Like, this is what I would like to do. I need short-term gains. I need long-term gains. I'm focused on cash flow. I'm focused on this. I am 35. I'm 40. I want to retire. I want to accomplish. If you start with the vision where you're heading, then it will be easier for you to narrow it down and find the right path for you. So let's say you have a vision that you are, want to retire or have, cash flow coming into your life from multiple rental properties in 15 years from now. Okay, let's just say that's where your starting point. And that's, at least you want to have $5,000 in 15 years every month coming into your life, right? So this is where your goal is. Now let's start scaling it back. See how can we get there in the best possible way for you. Should you invest in a passive, like with someone else? Should you buy properties by yourself? And the more you narrow the possibilities, I know it sounds very trivial, people don't take the time to do that. The more you need to be able to clarify what are your concerns, right? And when I say clarify, list them down. Take 5-10 minutes, and if you're working with a partner or a friend or a spouse, take 10 minutes and just write, literally write. Will it rent? Can I trust the property manager? Will I have evictions? Will I have repairs? What if the property is vacant for a long time? What if the market tanks? Write all those things. Now, I don't know if you're going to have answers for everything, right? You may not, but at least you have to identify the challenges, the concerns, the problems, the fears, and then when you can contain them in a specific components, right? You can probably address them one by one. So let's say you have a list of 10 things that you are concerned about, and if you're not listing them, then you can't identify them, and there's like a lot of noise in your head, and you're not really breaking it down into small components and trying to tackle each component individually. Take one component, try to find the answer, either by yourself or talk to experts such as myself, such as others. See if they give you reasonable answers, right? Or somewhat of an answer. And then one item by item, try to determine, are you able to mitigate? Maybe there's for example, you have some concerns about repairs. Well, you can take home warranty insurance, and that will probably mitigate a lot of your concerns about repairs. Maybe not 100% of them, but 80% of them, 70% of them. So that's one way to mitigate, right? If you have concerns about evictions, then you probably want to follow a certain path of investing to avoid evictions. If you're having challenging concerns about tenant not paying the rent and being late, maybe you should pick the right investment area that will decrease the chances of that will happen. Again, one by one, identify those things and then try to tackle them by yourself or with some outside help of an expert, someone who's done it. It could be another friend or investor who's done it before. What I'm trying to say is, I had 2 conversations with this couple, and in both conversations, I could tell that they're running in circles. Instead of stopping and saying, okay, this is what I should try and do, this is, those are my concerns, they were just chasing back and forth between different elements. My guess is that they're not going to be able to execute, or in a timely manner, because they're going to continue stewing on the concerns. There are so many things they express there's so many things that express their fear and and confusion and concern. No doubt, it will prevent them from executing. It's a type of analysis paralysis, but they're not overanalyzing properties. They're just overwhelmed with the information. So take the time. If you're overwhelmed, try to start with where are you heading? What are you trying to accomplish, and in what time frame? And then what do you think is the right investment path to get to that point? And then list down all your concerns, fears, anything, make literally a list, and then by using that list, try to see if you can answer item by item, how can you mitigate the risk, how can you lower the risk, or at least understand the risk and the consequences of the risk. So this is what I wanted to say, because what I wanted to say is because what I'm seeing on my end is that you talk to a couple and things are like blown out of proportions. I've been doing it for so many years. Is it bulletproof? No. Do all the houses are rented 100% of the time without hiccups? Absolutely not. There are multiple hiccups, vacancies, and sometimes evictions and repairs and miscommunication with property managers. Absolutely. But when you're focusing on the repairs or the problems, you're missing on the bigger picture. What is this property giving to you, right? The fact that this property, the ownership of one property or multiple property is benefiting you over the long term is by far much better than all the little pieces of noise you will have, not if you will have along the way. So remember, sometimes you got to see the big picture. right? And not focus on the small details, but you got to understand the small details and how to address them in order to be okay with the big picture. So don't focus on, so don't focus on the fear itself. Focus on identifying, breaking it down to components, listing it down, and start tackling it one by one by one by one to help you mitigate, understand the risk, understand the option when something happens. Hopefully that helps. Just try not to blow it out of proportions. With that said, let's see if we have questions. And hello to everyone. Hello, Nir. Good to see you again. And hello, Shachaf and Ronen and Orit. I see one question. They could write the pros and cons of each type of investment they might be interested. Absolutely, you can do that. If you would sit down and write pros and cons, sometimes you don't know to tell all those pros and cons, I think, if you're a beginner. But if you are someone who the way I like to say it, I think it's a good point already that you're bringing it up. I would say write your own pros and cons, not the investment. For example, I am so busy, I would not, I cannot do an investment that require, a significant amount, amount of time. Okay? I am not knowledgeable. I need to work with someone who's knowledgeable, or let someone else handle, the affairs, most of the affairs. I am limited, with funds, so I need to be able to with a mortgage or without, to do a certain type of investment. Sometimes if you actually write your own pros and cons, what is good for you, what you're comfortable with, what you don't want to deal with, then that will probably help you determine which type of investment is more fitting. Because if you're very busy and you don't want to deal with it and you don't want a headache, like this couple also mentioned, you probably want to go in a passive route, something that will require minimal amount of your time. But if you're someone who wants to control and be more in control seat, then you're not giving that control. Then those are the type of things your personality can dictate what kind of investment you should do. So while doing a pros and cons for different type of investments is excellent, I'm actually taking it one step back and saying, do your own pros and cons. What would be a good fitting investment for you, or the profile of the investment, time-wise, experience-wise, comfort zone, control, all of those things would probably help you determine which one is the right one for you or not. So I really appreciate the feedback. I think it's a good one. Definitely required. I think people just sometimes jump in and start investing, or they're following the herd because someone else is investing without even, giving it too much thought. I'm done with what I wanted to talk today. We do this session every Friday, or almost every Friday. We took a little break during the summer. We resume as of last Friday. So everything you hear is being recorded in 3 capacities. It's on, on a podcast, it's on YouTube, and it's on Facebook. So you can actually listen to any one of those channels, whatever suits you, as soon as we're done, and we're going to upload it to all of them. It's actually being uploaded pretty much automatically. If you are listening to the recording and if you have questions for us, by all means send us an email, or you can call us or put it on Facebook. We will try to respond. And it's all I get a lot of feedback from people who are saying we did not join the live, but we listened to the recording one way or another. So by all means, do that. And of course, if you want to work with us and see if we can help you actually invest and not just talk about it, you can get in touch with us. Hello, Bracha. Thank you for joining. We are almost done with the session. So if you joined late, it will, it's recorded. You can listen to it. And if there are more questions, I'll be happy to take them regarding the topic or feedback, like Orit did. I'll be happy to take them. And if not, we will call it a wrap for a quick session today before we say happy weekend and Shabbat Shalom. So I'm going to wait for another half a minute or so and see if there's anything coming up, and we'll take it from there if there are questions, or we will have a wrap. Which links are you talking about? I'll be happy to. Can you tell me which links? I will put a few links. I don't know, Kenny, let's see. There is a link to our website, which has a lot of information and recordings, and then the link for our YouTube channel that also has a lot of information, a lot of videos, and then we have link to our listing website where we have properties, and hang on a second, which one else, and of course link for the Facebook, which is where we are right now. Okay, if you think there are other links I didn't put, just let me know, no problem. And can you put links? Near, what would be your advice to people that are hesitant to invest, remotely? My advice for you is to, once you get started, decide on the market. First, fly out, meet with the local team, see the market, see the potential houses, make it real by the people, real by the area, real by the city, the property manager, agent, make it very tangible. The minute you are there and you're actually seeing those properties and you're meeting with the people, it will build, you're not gonna know a market by a 1 or 2 day visit, but you're gonna build some confidence in the local, in the local market, in the local team, and that will help you make you more confident about it. And you know what? There's one other thing. There's got to be a point of leap of faith. And one of my investors put it, I have 2 examples of what the investors told me. One said, the alternative of not doing is worse to me than than actually investing, because I'm already in my 40s and I have not been investing, and I can see what I have not been able to to accumulate it. So obviously what I've done until now, it's not really working for me, just working and trying to save. I need to do something a little bit different. So think about that as a concept of what are you doing? If you're investing and the fear is just remotely, it's one thing. Then you just have to get over that fear, and I think visiting that market or 2 markets will really help. If you're not investing altogether, then you probably need to kind of dig down and see what prevents you from investing altogether. And then there's got to be a leap of faith. Eventually, there's got to be a leap of faith. Altogether for investing, not just working with us. Altogether about investing. Thank you, Rate. Yep, that was in December. Okay. Any more questions? Okay, you guys. Then in that case, thank you everyone for the comments. Thank you, Reed, for the feedback. Nir for the question. You are most welcome to listen to the recording, ask questions afterwards, get in touch with us if you wanna see if we can work with you, if this is a good fit. I wanna wish you happy weekend. Enjoy your weekend. Shabbat Shalom for those of you who are speaking Hebrew, and I hope to see you here again next week, next Friday. Have a terrific weekend, everyone. Bye-bye.